On December 18, 2024, silver crossed $79 an ounce for the first time in history. Most people missed it. The financial press barely covered it. Reddit went quiet. Even the gold bugs seemed confused. But in boardrooms across Silicon Valley, something changed. Tesla's CFO made 3 emergency calls that afternoon. Apple's supply chain team canceled their Christmas party. And a mid-level analyst at Morgan Stanley started updating his resume. Because silver isn't just a metal anymore, it's the bottleneck. Let me show you something uncomfortable. Every iPhone uses about 0.3 grams of silver. Doesn't sound like much. But Apple shipped 230 million iPhones last year. That's 69 tons of silver, just for phones. Now add solar panels. Each standard panel uses roughly 20 grams. The world installed 450 gigawatts of solar capacity in 2024. That consumed about 6,200 tons of silver. Then there's electric vehicles. The average EV uses 25 to 50 grams of silver in its electronics and charging systems. Global EV sales hit 18 million units last year. Another 450 to 900 tons. Data centers, medical devices, missiles, semiconductors. Silver is in everything that defines modern life. And here's the problem, we're running out, not out of silver in the ground. We have plenty buried under mountains in Peru and Mexico and China. We're running out of the ability to get it out fast enough. Let me explain the math that nobody wants to talk about. Global silver mine production in 2024 was roughly 850 million ounces. Sounds like a lot, but industrial demand alone hit 680 million ounces. Investment demand took another 200 million. Jewelry and silverware used 180 million. You don't need a finance degree to see the issue. That's over 1 billion ounces of demand, against 850 million ounces of supply. The shortfall gets covered by above-ground stockpiles, recycled silver, government reserves, except those stockpiles are shrinking fast. Here's where it gets interesting. Silver mining, like oil drilling. You don't just decide to produce more silver because the price went up. Why? Because 70% of silver comes as a byproduct. It's extracted alongside zinc, lead, copper, and gold. You're mining for copper. Silver thus happens to come along for the ride. So, when silver prices spike, mining companies can't just make more silver. They'd have to mine more copper or more zinc, neither of which might be economically viable at current prices. This creates a weird situation. High silver prices don't automatically increase silver supply. They just make everything that uses silver more expensive. And tech companies are starting to panic. Let's talk about solar panels for a second. The green energy transition relies on solar. Governments are subsidizing it. Trillions of dollars are being deployed. The entire climate agenda depends on scaling solar production by 3 times over the next decade. But here's the uncomfortable math. At current silver intensity, tripling solar panel production would require an additional 12,000 tons of silver per year. That's about 15% of total global mine production. Except we don't have 15% of spare capacity. We're already in a deficit. The solar industry knows this. They've been trying to reduce the silver content per panel for years. They've gotten it down from 400 milligrams per watt in 2010 to about 65 milligrams today. But there's a floor. Silver is the conductor. It's what makes the panel work. You can't eliminate it completely without losing efficiency. So solar manufacturers are stuck. They can't hit their scaling targets without silver. But silver at $79 an ounce makes their economics collapse. A standard solar panel uses about $16 worth of silver at that price. That's nearly 15% of the total manufacturing costs. When silver was $20, it was manageable. At $79, the margins disappear. Now let's zoom out. Tech stocks have been on an incredible run. Nvidia, Microsoft, Apple, Tesla, the Magnificent Seven added $5 trillion in market value over the last 2 years. These companies are built on a simple assumption: Moore's law continues, supply chains scale, and input costs stay manageable. But silver at $79 breaks that assumption. Suddenly, the cost of producing semiconductors goes up. Data center expansion gets more expensive. EV production margins shrink. Solar panel installations slow down. Wall Street hasn't priced this in yet, because Wall Street doesn't think about silver. It thinks about software and AI and growth multiples. But physical reality doesn't care about your financial models. Here's the truly strange part. Governments are the biggest cheerleaders for the green transition and AI infrastructure. They're subsidizing everything. The Inflation Reduction Act, the CHIPS Act, the EU Green Deal. But these same governments never asked a basic question: where does the silver come from? The United States produces about 30 million ounces of silver per year. It consumes over 150 million. We import the rest, mostly from Mexico, Canada, and Peru. Now imagine a scenario where silver prices stay elevated, or go higher. What happens to national security when your entire tech and defense infrastructure depends on a metal you do and produce domestically? China's already thinking about this. They've been quietly stockpiling silver for years. Their official reserves are opaque, but estimates suggest they hold between 2,000 and 5,000 tons. Why? Because China controls about 40% of global solar panel production. They understand the bottleneck. Let me give you a small historical parallel. In the 1970s, there was a similar panic around rhodium and platinum. These metals are critical for catalytic converters in cars. Supply was tight, controlled by South Africa and Russia. Prices spiked. Automakers panicked. The industry scrambled to find substitutes and reduce usage. It took a decade to stabilize. But here's the difference. Cars in the 1970s weren't also competing with solar panels, EVs, data centers, and semiconductors. Silver's demand profile is vastly more complex, and the transition timelines are much tighter. Governments have committed to net zero by 2050. That's 25 years. To hit those targets, silver demand needs to double or triple. Where does it come from? There are a few possible outcomes here. 1. Silver prices stay elevated, forcing industries to find alternatives faster. Tech companies invest billions in R&D to replace silver with copper, graphene, or some new conductor we haven't invented yet. 2. Governments intervene. Strategic reserves get released. Trade policies shift. Mining gets fast-tracked despite environmental concerns. 3. The green transition slows down, not because of political will, but because of physical constraints. The math just doesn't work. Or 4. Something breaks. A major solar manufacturer declares bankruptcy. A tech giant misses earnings because of input cost inflation. Equity markets reprice the entire sector. None of these outcomes are comfortable. Here's what makes this so unsettling. Markets are supposed to price in scarcity. When something becomes scarce, prices rise, incentivizing more production. But silver is weird. The supply response is delayed, inelastic, and geographically constrained. By the time new mines come online, we'll be years into a deficit. And in the meantime, every tech company, every solar developer, every EV manufacturer is competing for the same limited pool of metal. The weakest players get priced out, projects get delayed, margins compress. And Wall Street, which spent 2 years pricing in infinite growth, suddenly realizes that infinite growth requires infinite silver, which doesn't exist. So here's the question nobody wants to ask: what if the entire AI boom, the green energy transition, the electrification of everything, what if it all depends on a metal we can't produce fast enough? What if the bottleneck isn't technology or capital or political will? What if it's just silver? And what if $79 an ounce isn't the top? What if it's just the beginning? Thanks for watching. Don't forget to like and subscribe for more deep dives into the hidden forces shaping our world.